everybody, Buffy the Rate Slayer here, and we are back with the final episode of the April Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Thanks for joining me, guys. Hey, investors are closely monitoring the economy, especially after the Fed expressed inclination towards slowing down its rate hiking plans. U.S. Treasury yields fell down swiftly earlier this week, but gradually increased later on after the GDP and inflation data came into picture on Thursday. U.S. equity futures showed mixed results after several corporate earnings reports were released. Oil steadied as traders grabbed the stock following a two-day slump amid persistent concerns over its demand. West Texas Intermediate futures traded above $74 a barrel. Meanwhile, the orders placed with U.S. factories for business equipment fell 0.4% in March, considerably more than expected, suggesting higher borrowing costs and a cloudy economic outlook are restraining capital investment. Initial unemployment insurance claims declined to 230,000 for the week ending April 22nd from 246,000 the prior week. Continuing claims fell by 3,000 to 1.858 million for the week ending April 15th, suggesting a continuous tight labor market. The U.S. economy's first quarter report card spending and inflation have projected to keep the Federal Reserve tilted toward another interest rate hike next week. U.S. economic growth slowed by more than expected as the GDP grew just 1.1% overall in the first quarter. It is 0.8% lower than the consensus. The Fed's preferred inflation metric accelerated to a one-year high this quarter. The Personal Consumption Expenditures Price Index grew at a 4.2% annualized pace in the January to March period. Excluding food and energy, the index rose 4.9%. Well, are you wondering how the housing market is doing? Well, let me tell you. U.S. new home sales unexpectedly increased in March to the highest level in a year, suggesting an easing in mortgage rates is helping the housing market find some footing. Purchases of new single-family homes increased 9.6% to an annualized 683,000 pace last month from 623,000 in February. Mortgage applications for U.S. home purchases increased for the second time in 3 weeks. The purchases increased by 4.6% in the week ending April 21st. The refinance index increased 2% from the previous week. The market composite index rose 3.7%. Let's wrap it up. Investors are gearing up for U.S. Federal Reserve and European Central Bank interest rate decisions next week for clues on the health of the economy and the path of monetary policy. While GDP grew just 1.1% overall in the first quarter, final sales to domestic purchasers rose a much stronger 3.2%, dispelling recessionary fears for now. The print will likely strengthen the Fed's commitment to raise rates by another 25 basis points at their May 2nd, 3rd meet to combat the inflation. However, I will update you on that next week, so don't worry, I got you. Well, that's it for this week, everybody. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have an amazing Friday and an even better weekend. Buffy, out.